Hi everyone, today let's talk about Amazon earnings. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Amazon topped estimates coming in at 24% revenue growth for advertising. We also saw a re-acceleration of AWS, their cloud service. And on the back of this, they're up about 2%, so that's pretty good. You can see earnings per share, 98 cents versus 83 cents. Revenues, absolutely colossal, $143 billion, almost a full $1 billion higher than expected. And you can see web services beating by $500 million. Advertising coming in right at expectations. But overall, this was a great quarter for Amazon. And on the back of this, the stock is definitely going higher. And the crown jewel for me here is AWS accelerating once again. We did see this from Microsoft as well, but it seems like cloud services are going higher. And we also saw growth in their core business in the retail space, 16% year over year with $34.5 billion. Moving over to fear and greed, you can see we finished at a 41 from a 43 yesterday, went much lower. You can see we're back into neutral here for momentum, strength, still in extreme fear, breadth in fear, put call ratio and volatility still in neutral, and safe haven demand continuing to sit in extreme fear, while junk bond demand continues to sit in extreme greed. So mixed across the board, but you can see a little bit of a pop here on volatility. Markets were selling off. You can see it here on the momentum chart, and now you can see a little bit of a rollover here on the overall chart. So definitely looks like we're seeing a little bit of a reversal of conditions here going into Wednesday, which is FOMC day. Moving over to seasonality, it was expected to be a little bit bearish today. I think we got even more than we bargained for. We'll take a look at the charts later, but it was not great. And then looking at May, you can see this is a bearish seasonal period, so keep that in mind as we move into next month. Moving over to the earnings calendar, you can see a lot of green on the board. Starbucks, that was a dumpster fire. Starbucks was down a lot. Might do a video on them specifically. Otherwise, most of the major players did well. 3M doing well. AMD did miss pretty big. We'll take a look at those charts later as well. And then looking at Wednesday, don't forget you have American Express pre-market. You also have Pfizer pre-market here, CVS, a couple of different names. Nothing major besides MasterCard. And then don't forget for the Thursday session, you do have Apple after hours. So that's going to be a big one, obviously, and it will push around markets. Moving over to the economic calendar, Eurozone CPI coming in a little bit hotter. GDP also came in hotter, so that was good. Consumer confidence coming in lower than expectations. Same with Chicago PMI missing by quite a bit. And then for tomorrow, we have ADPs in the morning, ISM manufacturing PMI and prices, JOLTS report, and then FOMC in the afternoon. And then looking at Thursday, not a whole lot here for Thursday. Fed balance sheet, always interesting. Moving over to Max Payne, you can see it's up at 507. Stock price was down at 501. So 510 was resistance. We talked about that. 500 still support, so we're still within the range that we've been talking about. We'll see if that 500 level holds after tomorrow's meeting, and I think that it might not. Moving over to the charts, starting off with the S&Ps, we talked about this 509.77 level acting as resistance. Hit it yesterday, really couldn't get any higher. Held at that level pre-market today, and then we sold off massive pretty much throughout the session. Really should have been more attentive to this move. I thought 505 was going to hold. You can see we did get some interactions at that level in the 200, but once that broke here for that last candle of the day, bit of a dumpster fire. You can see momentum coming into the downside. Overall 1.58 coming off of that 21 EMA, and it is down even more after hours. So momentum re-accelerating to the downside, and right now this does look like a lower high setup coming off of that 21. And if this continues here, that is going to be terrible. So keep this in mind. SPY absolutely breaking down. And it does kind of look like a bear flag too. If you give it some structure like that, you can see a breakdown, bear flag. And if this breaks down here, then this could be going much, much lower. So keep that in mind. Looks weak going into tomorrow's session. Moving over to the Tasty charts on the 4-hour, you can see we did get a reversal of conditions on that 11 o'clock candle on the 4-hour chart. You can see bearish ATR stop is now at 510. Pretty much right at the highs of that previous consolidation. Now we'll see what happens. Lower ATR right here is at 498.30, so that doesn't give you a ton of downside potential over the next day. We did get that strong reversal here, so potential support, but still bearish conditions. And looking at the hourly chart, you can see we way overthrew that lower ATR band. Definitely bearish conditions, but usually when we overthrow it, we do get at least a little bit of sideways choppy price action, pull back in time style move, or maybe even a rally back up into the 504 area. Moving over to the NASDAQ, similar thesis. 433.24 was the level. Tested that yesterday, broke down from it here today. Broke well below that 424 level, which I thought was a bit of a surprise. This did move a lot faster than I expected. It was down almost 2% on the day, and it's definitely down more than 2% with the after hours price action. Momentum bearish, RSI definitely bearish. We'll see if it's going to bounce off that SMA here on the daily chart. You can see right there. If it's going to bounce, it needs to do it here pretty soon. But again, you can see this move down, kind of a bear flag type setup, and then a potential for a breakdown coming off of that 21 in VWAP. We said this was the zone where if it was going to turn bearish, it should do it here. And we talked about it yesterday. It was a critical turning point. And it seems like the move here is bearish. Moving over to the Tasty charts, you can see that same thesis from the SPY. 144 EMA rejected from their bearish conditions. Lowest ATR band here is 419.04. You would expect some kind of bounce from there. You can see on the 4-hour chart, we touched it here. And then we got a couple days of sideways chop, down move, sideways chop, down move. So the 4-hour chart, a little bit more reliable on those ATRs, but still looks bearish. And then looking at the hourly chart, same thesis as the SPY. Bearish conditions, continues to trend lower. It did overthrow that ATR band, which is at 425.11. Maybe we see a slight pullback to the 8 EMA there. Just depends on what we see in the pre-market, and then from the FOMC obviously is going to dictate a lot of price action. Moving over to the Russell and the Dow, pretty much the same thesis across the board. Russell down 2%, momentum rolling to bearish coming off of that 21 EMA. Broke back below the trend line, probably headed back down to the 190-189 area. It's down after hours. Similarly on the Dow, 1.48%. Big move here for the Dow. You don't see candles that big super often. Tested it here, broke down, tested it a second time, broke down. It's probably going to take out that 376.35 level. So this looks like a more significant down move going into tomorrow's session. Moving over to stocks that moved today, we got oil and gas sector going down more than 4%. Massive candle for them. You can see it had a huge run January all the way up until mid-April. Touched that level, overthrew it one candle, and then couldn't hold it. 161.59. We talked about that level a couple of weeks ago, I believe, and then we got this big move down, tried to retrace, and now we're breaking down further. Huge volume on that move, definitely selling in the oil and gas space. And then you got Donald Trump media hanging in there, Truth Social rallying 6.94% here today. Momentum absolutely bullish. Price target right now, 57.07. Trading stock for sure. It's right at these previous consolidation highs. Probably going to hit that level at 57. Moving over to the Mag 7, you can see the Mag 7 was down quite a bit, over 2%, 2.14. Again, coming off of that same consolidation. We're seeing it pretty much across the charts. Dip low, retest of the 21, retest of VWAP. And now we're breaking down again. Down more after hours. 333.21 is the next level of support. And then you got trend support just below that, 327.37. Moving over to Apple and Tesla. Both of these had a rough day today. Tesla had a huge day 2 days ago, 15% up, and then it was down 5.5%. So momentum bullish, RSI moving lower, but still technically bullish. And then looking at Apple, same thesis, got up here, tested that 55, breaking down from that level just like we did last time. We'll see if this can hold a higher low on this move. Momentum, it did step down a little bit, which is concerning. RSI still could bounce off of that SMA. So looks like consolidation still hanging in there off of this bigger down move that we've been seeing from up around the 197, 198 area. But now the 170s continues to hold support, and 165.70 is that critical zone that we've been talking about. Overall, both of these look bearish going into tomorrow's session, but could potentially find some support in these zones. Moving over to Microsoft and Amazon. Microsoft was down 3.2%. Massive down day for them. They fell yesterday after retesting that same zone we've been talking about on the Friday session. Fell 2 days in a row, and you can see we did get a little bit of a bounce after hours. We're right at the low here from Thursday of last week. So interesting zone. You also got the 144 EMA there at 385.93. And then looking at Amazon, big news here for today. Going into the earnings, it was down a ton. 3.29%. Again, same setup, move down, kind of a bear flag, move down with that big kind of wick rejection that we got on the 25th. And now we're coming into that 174.23 zone. Let's go full screen on this one. Looking at the 4-hour chart, you can see big wicks in both directions. Positive on the earnings so far, 1.5%. So it's hanging in there. Still right at that trend line. We'll see how that plays. Go ahead and extend that out a little bit. So right in that zone, rejecting off of that trend line. Huge volume on the day, momentum bearish. Right now, still doesn't look like a great setup, even with that strong earnings. Moving over to staples and discretionaries, both of these were down on the day, 0.44 and 2.43%. So discretionaries falling a ton, staples hanging in there, still at support. After hours, it is technically below it. You can also see momentum rolling here. So this is probably going to go a little bit lower. And now this looks like a bit of a double top. So you have a high, dip low, high, couldn't get above that previous high. So if this breaks here, that could be quite bearish, especially after this really strong move that we had. And then looking at discretionaries, this is starting to look like a lower high. So high, dip low, lower high established, big breakdown from that zone. Momentum hasn't broken yet, but this is probably headed lower, at least into this previous consolidation, down around 172.50 in my opinion. Moving over to transports and industrials, I just wanted to highlight the fact that everything is selling today. It was red across the board. All of the sectors, all of the major stocks, everything was quite bearish on the day. And you can see transports on the daily chart getting into that 144 EMA zone. It's going to find support. The next level would be the 200 at 63.77. But right now it looks quite bearish. Let's see if we can find a volume area. Yep, right in that 200 makes sense. Right in that 63.75 area. And then looking at industrials, same thesis. Breakdown, bear flag, looking for that bigger breakdown. And this seems to be accelerating here. And you can also see on this most recent move, there is not a ton of volume through here. So if this breaks, it's probably going to do it quite quickly. Moving over to breadth, we did finally get a rejection on breadth, so it's been going up. We got that pullback. 51.75, we talked about that level, didn't even quite touch it, and now we have momentum rolling to bearish. Same here on the 50-day, probably going to break to a lower low. Both of these on breadth say that we are headed lower. Both of these candles fully engulf the previous candle, and they do not look strong. And then moving over to the dollar, you can see the dollar did break out. We had an attempted breakout, pulled back, held a higher low, and then broke out higher. And this is absolutely a move, bull flag move. Looks like this is set to go much, much higher. And if this breaks out here above this October high, that's going to send markets lower. And I think this is already what's driving markets. You can see it was pretty much straight up throughout the session. The dollar headed higher is going to be bearish for equities, and that is what we're seeing right now. Moving over to yields, we're also seeing yields break out a little bit. 2-year going higher on the day, over 1% higher. 10-year still in the same consolidation, but it did close on the high. Momentum slightly bearish, but this is still a bull trend. And similarly to the dollar, if we get into these October highs up around that 5% for the 10-year, that's going to be quite concerning. 2-year also seems to be headed in that direction. Obviously, the FOMC is going to decide where these yields go, how hawkish they are. I still don't think we're going to see another hike, but I think we're probably going to stay at current levels for a while. I would say, in my opinion, 2 years from now, the 2-year yield will be lower. We will get a cut eventually within that 2-year time frame, so I think this rally will be short-lived, but right now it does look bullish, and that is bearish for equities. And then looking at bonds, J&K confirming the rally down. So we got those 2 big candles in a row, gap down and fell, huge volume on that sell. So seems like J&K is leading us lower and confirming that move down here today. So more moves down to come. And then similarly, TLT also breaking down with yields going higher. It hasn't taken out this most previous low, but you can see we hit that trend line, broke down from there, and you would expect this to go lower. 85.90 is my next support. Overall, both of these look bearish. Moving over to volatility, looking at the VIX, you can see that 1470 area. We talked about that being a zone where it could bounce, and sure enough, it did. You can also see momentum rolling to bullish, so this is probably headed up. I don't think we'll see a higher high, but probably headed towards that 1850 area over the next couple of days. Similarly here on the move index, got 2 days in a row of bullishness. This is probably headed higher as well. So volatility across markets with equities and bonds going lower. Moving over to my accounts, I took a pretty heavy loss. I did not react as quickly as I should have for sure. Still did okay with the NASDAQ being down more than 2%, and it's down even more after hours, and that is factored in here. I think the reason that I stayed in these positions too long is that I was really deep in the money on these 200 shares, and I thought that we would hold up at least a little bit better. I think it was at 425 here for tomorrow, with quite a bit of credit on that, and I did roll down to 424, still have about $3 credit on that. So I'm hanging in there on that position, and then I'm looking to get into a put and call position to potentially give myself more protection there. If we get a short-term bounce, I'm probably just going to get out of all of these positions. Everything looks super bearish, and I don't think the catalyst from the FOMC is going to be bullish, especially with that dollar breakout. That is very, very concerning. Huge volume on the down moves that we saw here today as well. So everything looks terrible. If anything, I might sell some longer dated calls just to try to collect a little bit of credit as markets go lower. Let me know down in the comment section what you think of Amazon. Is it an opportunity here? Is the growth going to continue to accelerate? Or is all of that already priced in and it's going to go lower with markets? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.